Well, it doesn't seem like the markets today are that patient with, people holding periods down to 6 months or a nanosecond. I mean, that's not really long-term investing. But I think that long-term investing does work. But then what's long-term? A lot of statistics look out 20 years, and I don't think, that's a meaningful range of time that you need to work in. So you need to be aware of shorter term. But what's short? I think you need to look at 2 to 5 years, or at least that's how we view going into a position. You have to give the market time to come to your idea or for what you thought was going to happen to work out. So when you build a portfolio of ideas that may be out of favor, you want to give them some time. And so I don't recall complaining a whole lot, but you do hear the bad news that's reflected in your ideas. You may hear that from your clients from time to time, especially when the media is pushing it out there. So you have to be able to somewhat suppress that or keep focused on what your thesis is and your reasoning behind owning the stock. Even though, I mean, one example is Best Buy. Best Buy had decent numbers, but they were going through a bit of a downturn, and they had to retrench. And stock was 30, and it got down to 10. And a lot of the things that management was doing seemed to make sense. As far as doing more online selling and shrinking some store sizes. And so you could see some of the things that they were doing, and taking the one-time charges, and basically. That was one of the best performing stocks. But the news at the time, when it was going through some of those reworkings, it was pretty bad. And the emotional side of you says, all right, let's just sell it and find something else. But sometimes you should be adding at those times. So.